Hi guys, welcome to our next session in valuation series. Today we will be talking about one of the most important phenomena that goes on in financial markets. That is, does GDP growth translate to equity market return? So if we read the newspapers, we watch CNBC, media channels, Twitter, right, WhatsApp forwards, we keep on reading these days that India is bound to be the next superpower. India economy is going on a excellent growth trajectory, right? The IMF projections, the World Bank projections are also decent. We have been the fastest growing economy after COVID, correct? So a lot of people are way too optimistic about. It's a excellent time to buy Indian equities because it seems like a fair game. कि जीडीपी ग्रो करेगा तो ऑब्वियसली इंडिया का निफ्टी ग्रो करेगा because they go hand in hand. That is what people have a very rock solid perception about. Hence, today's session is very important, and I would like to start it with a statement that GDP growth rate doesn't always translate to good equity market return. And as you would have seen our training methods, we like to back our thought processes with data. Actually, inverse, we build our thought processes based on data. So when we were young, we were trying to grow in this field. Even we came across the same phenomena कि इंडिया ग्रो करेगा तो भैया मार्केट्स ग्रो करेगा, तो इंडियन इकोनॉमी की ग्रोथ रेट पे ध्यान दो. बट इन आवर टाइम when we studied the data, it gave a very contrarian insight. And we'll talk with few examples right now. But first, we'll have to understand that currently India is at approximately $3.5 trillion of GDP. And why this junction is way too important and why almost everyone in the world is tracking our growth rate. Because if we continue on the current trajectory of growing at, let's say, 9 to 10% in nominal terms, like till let's say 2030, which is 6-7 years from now, we would have converted into a $5 trillion economy at a rate which would be faster than what United States could achieve. So US practically took a 10 years to reach from $3 trillion GDP to $6 trillion GDP. We might be able to do that in 7-8 years only. So our growth curve would be more steeper than one of the world's most advanced economy. That is why this junction is being touted as one of the most relevant periods for the Indian economy, going from 3 trillion to 6 trillion. And people believe that because it is such an amazing feat, it will also provide a higher return by buying Nifty. So, but if we just try to understand few economies which have already traveled this path and the kind of returns their equity market provided, you might in the end like to change your ideology about the prospects of Indian equity market returns. So if we talk about US, United States approximately took 10 years to grow from a $3 trillion economy to a $6 trillion economy. I think if my memory serves me right, US reached $6 trillion GDP benchmark in 2001 or 2002. Now if we look at Standard & Poor's S&P 500 index, जो कि अमेरिका का इंडेक्स है इंडिया के निफ्टी जैसा, the returns provided by S&P 500 during this period when America was at $3 trillion GDP to $6 trillion GDP, that return was approximately 11% CAGR, which sounds like a very good deal if you were an American investor, right? It was a very golden period to invest in American equities. Similarly, if you talk about India, India reached from $2 trillion to $3 trillion levels of GDP in approximately 7 years. And even the Indian markets broadly tracked by Nifty and Sensex, they gave us a CAGR of 10.5 to 11% CAGR, right? So both the scenarios point us to a conclusion that GDP growing from 3 trillion to 6 trillion would be fantastic because it has happened in America. In India, the movement from $2 trillion to $3 trillion was backed by good equity market return. So obviously from 3 to 6, when we will become more bigger, the equity market returns would be greater. But there's one very important data point that we need to bring into limelight now. That is also called as a Buffett indicator. That is market cap to GDP ratio. That is sort of a valuation ratio. जैसे अपन एक कंपनी को वैल्यू करने के लिए एंटरप्राइज वैल्यू बाय सेल्स का रेशियो यूज करते हैं, ऐसे ब्रॉडली स्पीकिंग, नॉट दिस इज नॉट एग्जैक्टली करेक्ट गाइस, बट ब्रॉडली स्पीकिंग एक ओवरऑल कंट्री का वैल्यूएशन जज किया जाता है मार्केट कैप बाय जीडीपी रेशियो से, करेक्ट? Buffett, I think in the annual letter 2001 or 2 of Berkshire Hathaway, talked about this indicator, which he used to use to judge कि American markets overvalued है कि undervalued है. This ratio itself has a lot of positive negatives both, that I would be talking about in the next session, how to correctly use market cap to GDP to value the fairness of equity markets. But just using this indicator in the current session, America's market cap to GDP ratio, when America was at $3 trillion level, was just 39. That means अगर GDP $100 का था, तो जितनी भी लिस्टेड कंपनीज थी S&P 500 के अंदर, उनका सबका टोटल करे तो मार्केट कैप कितना आता था? $39. आई एम गिविंग यू अ वेरी क्रूड डेफिनेशन, राइट? आई एम नॉट गोइंग इनटू इंडेक्सेस कैसे बनते हैं, मार्केट वेटेड, फ्री फ्लोट वेटेड. आई एम कीपिंग इट सिंपल कि अगर $100 का जीडीपी था तो $39 का कंबाइंड कंपनीज का मार्केट कैप था, जो कि S&P 500 में लिस्टेड थी. दैट इज व्हाई मार्केट कैप टू जीडीपी बिकेम 39%, राइट? So this was a very good valuation point. America was bound to grow from 3 trillion to 6 trillion, and the starting valuations were very cheap. Historically speaking, India's, I don't have America data, but historically speaking, India's market cap to GDP ratio on an average has been somewhere around 65 to 70%, 75% to be precise, right? So anything below that or around that is called fairly valued and undervalued. Okay. Similarly in America, the starting valuation, जब अमेरिका की इकोनॉमी $3 ट्रिलियन पे थी, तब उसका मार्केट कैप टू जीडीपी रेशियो खाली 39% पे था. मतलब आपको एक ग्रोइंग इकोनॉमी मिल रही है बहुत ही सस्ते दाम पे. दैट इज वाई व्हेन अमेरिका's GDP went from $3 trillion to $6 trillion, the returns provided by market were also good, 11-12% CAGR, because valuations were cheap. Correct? Similarly, the example of India, when India was at $2 trillion and we went from $2 trillion to $3 trillion in 7 years ka time frame, our market cap to GDP was at 83%, a bit higher, but 83% was still in the fair value zone, plus minus thoda bahut, correct? So that's why the return provided by Nifty were also decent when India went from $2 trillion to $3 trillion. But now if we talk about few economies, let's start with Japan. So after World War II, everyone knows, right, Japan was crushed, but they rebuilt their economy, and by 1975, 1980s, they were a growing giant. Japan took 23 years to grow from a $3 trillion economy to a $6 trillion economy. They took, approximately 23 years. Can you guess the return provided by the Japanese index, equity market index called Nikkei? It was a negative CAGR of 4%. A negative return of 4% when the economy doubled from $3 trillion to $6 trillion. Why? Because when Japanese economy was at $3 trillion, at that point of time, the market cap to GDP ratio was at approximately 125%. That means अगर इकोनॉमी ग्रो करने वाली भी हो, लेकिन स्टार्टिंग वैल्यूएशन एज मेजर्ड बाय मार्केट कैप टू जीडीपी रेशियो बहुत हाई हो, इकोनॉमी ग्रो करेगा बट आपको इक्विटी मार्केट्स के थ्रू रिटर्न नहीं मिलेगा. Similarly, if I take example of the most fantastic growth story the world has ever seen, the China, correct? China's GDP, hold your breath, right, went from $3 trillion to $6 trillion just in 3 years. Remember, America took 10 years. Japan took 23 years. China just took 3 years to reach from $3 trillion GDP to $6 trillion GDP. That's called mind-boggling growth rate, especially for a country as a whole. We are not talking about a small cap company with 100 crores of revenue. We are talking about a giant like China. Can you guess the return provided by the equity markets in China, the frontline indexes? It was a CAGR of negative 2%. Negative 2% CAGR. Now, some may argue that the Chinese economy went from $3 trillion to $6 trillion during the periods of 2008, 9, 10, 11, which was a bad market overall for the world because of the 2008 Great Recession. But still, money chases yield. अगर इकोनॉमी इतना फास्ट ग्रो कर रही है तो यार बचा कुचा पैसा तो इक्विटी मार्केट्स को सपोर्ट करता. द एंटायर वर्ल्ड वाज विलिंग टू पुट मनी इनटू चाइना, correct? But still, the returns were almost on the verge of pathetic. That was negative 2% CAGR. Again, the common thing between China and Japan was even China's market cap to GDP ratio, the Buffett indicator. When China was at $3 trillion of GDP, that ratio was at 126%. So China के economy grew, but still, because starting valuations were that high, कि वहाँ के investors return नहीं कमा पाए. So one of the most important learning for us in today's session is whether we are talking about growth rate of an individual company or we are talking about GDP growth rate for a country as a whole, starting valuations आपके returns को dynamically affect करते हैं. आप एक 20% growing economy 50 मार्केट कैप टू जीडीपी रेशियो पे खरीद रहे 50% पे या 130% के मार्केट कैप टू जीडीपी रेशियो पे आप एक इकोनॉमी में पैसा लगा रहे हैं, आपका रिटर्न ड्रास्टिकली डिफरेंट निकलेंगे. इवन दो दोनों सिनेरियो के अंदर हो सकता है जीडीपी सेम 20% पे ग्रो भी कर जाए. द सेम थिंग अप्लाइज ऑन अ कंपनी लेवल. If we end up buying a 20% growing company at a irrational valuation of, let's say, 20-30 times EV by sales, we are bound to have very poor returns from the stock, even though the company would have actually grown. This concept is called PE derating. So we are also here plugging an old video of ours where I have taught the concept of PE re-rating, derating. So if someone has confusion regarding the same, I would request you to watch this video also that is being shown in the video right now. Through this, you will also understand the complete technicalities and calculations behind how PE re-rating and derating functions. So I hope after today's session, you would have definitely understood one thing. Growth is of paramount importance. Growth होना चाहिए एक इकोनॉमी में या एक कंपनी लेवल पे, but it's a job of an investor and an analyst too to judge the valuations they are paying today for the growth. And it's not always the case that if an economy will grow, the Nifties and Sensex of that economy will also grow. So guys, I hope you would have understood a very important thing today regarding valuations, and I hope this helps you in your professional career growth. Thank you so much. See you back in next session.